Well, Americans on the brink of their golden years may be feeling nervous right now about retirement. We've seen wild swings on Wall Street this year, and we're all experiencing an uncertain economy. Michael Neuenschwander with Outlook Wealth Advisors joins us live this morning to explain if this is really the right time to retire. Good morning.
Good morning.
Michael, I want to ask you first, what are you hearing from this particular group of Americans right now? What are they concerned about?
Yeah, so I mean, as we look and say if people are approaching retirement, there's definitely some worries. Whether it's worries about inflation while it's coming down, it's still persistent. It's still elevated. Pile that on with the volatility we've seen on Wall Street with the market, largely driven by the worries about tariffs, which kind of tie back into inflation. That if tariffs are there for long, then inflation may be creeping back up. And so when we look at those three things kind of compounding, it does give people a little worry, a little pause to say, is right now the right time to be retiring?
How much should this group of people be thinking about the stock market? Again, we've seen wild swings. It goes up, it goes down, it recovers. But if they want to step out of the workforce at a time when the stock market is down, is that a bad idea?
Well, when you think about it, I mean, you need to have a plan, the basics are, you want to be in a position where we all know to make money in investing, the analogy of the strategy is pretty simple. You want to buy low and sell high. Well, when you retire and you begin to start taking money out, if you're doing that when the time the market's down, you're sort of doing the opposite, of that strategy. So the term in the financial industry is called sequence of returns. But if we keep it real simple, what it means is, do you happen to just be retiring at a time the market's volatile or negative? So the best thing you can do is begin to have a strategy to say, where is the income going to come from without being totally reliant on those swings of the stock market?
What are some ways that people can protect themselves financially as they head to retirement, regardless of what the stock market is doing or inflation, as you've mentioned?
Yeah, so the best ways that people can plan for that, protect themselves for it is one, balance your portfolio. But what that really means is reevaluate the risk. Meaning if the last couple of months here, as the tariffs were announced and the market did some wild swings there for a couple of weeks, if that gave you a little taste of maybe how much risk is in your retirement nest egg, maybe it's time to rebalance and you shouldn't be taking that much risk as you're going into retirement or already retired. So rebalance the portfolio is one. The other is really having a strategy for withdrawing money. So unfortunately, many people don't have a strategy. They had a strategy for saving, but not a strategy for how to take it out. And what that looks like is if I need X dollars, I just sell X amount of investments or funds to get it. That's not really a strategy. It leaves you having to sell when things are down. So oftentimes that strategy encompasses having a certain amount of more conservative, safe money to say, here's where I go to first, so that I'm not having to sell things when they're down. And that ties right into simply just having enough cash, the emergency fund that we've touched on before, having enough cash available to weather those short-term storms so that you're not having to sell when they're down. And lastly, if you had to, where can you cut spending temporarily to sort of weather a rough patch, in the market?
Okay, that's a really good perspective there and something to think about. Finally, you have some people who say, I can stick it out in the workforce a little bit longer. But for those folks who are really trying to retire this year, what should they be thinking about and how should they be, I guess, getting their ducks in a row?
Yeah, there's definitely a few things you should consider if you're right there on the doorstep. I mean, one is looking if you're still covered by a company plan. Saying, well, should you max out the rest of your retirement savings? Most companies still give a match, so if you can pick up a little bit more company money on the way out the door, that's definitely beneficial. Also tying back to that idea of holding cash, that if you're working a few more months before you retire and you don't have that emergency fund or that nest egg saved up, hoarding a little bit of cash, here in the short run is a good idea. And then, it's always, take taxes into account. For many people, while you're still working, taxes may be a little elevated. As you retire, they may actually be a little less. So this is one of those instances, getting with an advisor, getting with some sort of professional to help you kind of walk through those steps, because all the other stuff we don't have time to cover in detail. What about Medicare? What about pension decisions? That's an area where really just getting with an advisor can help, answer some of those questions or give you a path, towards retirement.
Yeah, we know certain things do get more expensive, like medical, as we get older. Michael, thank you so much for your time and your expertise this morning.
Thank you.